this dotted line right here in orange, this is the 200 EMA. This red one right here, the thin one, that's the 5-minute 8 EMA. So you can see the pullback from S2 to S1. Then you have these big confluence right here, right? We have the diamond, we have the 8 EMA on 5 minutes.
Can you
We have
guys
the
hear me? I
200.
hear me sporadically.
We can hear you.
I can hear Erwin. Yeah, I can hear Erwin.
And then the purple line, that's the bias from SRX. And then we have the signal, right? So this move was beautiful. And it really, I'm operating on 2 minutes, but it really, I think that summarizes what you just said, Aiden, like having those confluences, waiting for I took this one, right? And that was just because I had the signal and then the momentum indicator was red.
Right.
So to me, that was good. Then momentum indicator was green. This one is the WADA ATAR was going down on red. So I took this one. But then when I saw this confluence, I was like, this is a beautiful setup. So I took it again down to S2.
Right.
Good trade. Yeah,
phenomenal trade. Erwin, I saw that trade that you saw, but my TOS crashed. I have templates for my active trader, and usually if there's some type of error message that I get, I just like to restart TOS. But I came in and I caught the first trade just roughly around you, and I caught that candle. I should have stayed in it, which was unfortunate. But basically, I saw the same thing as you for that first trade, like around 9:43. And then the second point that you mentioned is so important, where you have, you've got like the level, you got the 8, you got VWAP, and it's almost like they're all coming together. And it's almost like in calculus, you have a convergence of many different tests that you can do to test the sequence or a series, but they're basically all coming together. And then you just wait for the confirmation candle in the direction of the trend. And the beauty of doing that is if you get in right there, it's a good stop loss. And if it goes against you, so be it. But if it runs, you can, like, if you go in with 3 contracts, you can take out 2 maybe on the first good displacement down, and then you have that runner that you can protect. And Lance, you've been doing that fantastically as well too.
I like doing that because if you scalp it out for a 10% or so, and then just leave the runner at the stop loss break even, like you're in a winning trade either way. So you're going to be fine no matter what happens. Obviously, you may not make as much if you just close everything at the 10% because the runner might stop out break even, but you might occasionally get that runner that gives you a much bigger gain in the end. So it's really up to your preferences there. I don't think there's anything wrong with just taking the 10-15% of all the contracts and then just get out. But, eventually you want to hit those home runs. It's like baseball analogy, or have, what is it, 3-0? 3-0, a fastball's coming. You might as well take a swing at it and try to hit a home run. And if you don't, but you're still in the game and you didn't stop out or lose anything on it.
Have you guys ever tried using the 2-day VWAP also?
I haven't used 2-day.
Yeah. I guess the bigger lesson, or the bigger thing that I'm trying to say is, if you can operate under a very strict principle where you're only going to take high probability setups, and you're going to say to yourself, listen, if there's another setup that kind of looks like it might be okay, you're going to say to yourself, no, I'm not going to take that. I'm only going to take the ones that look like they're really, really good, like 8 with the VWAP, break and retest on the at a level, which is always a beautiful setup. The issue with the breakout, and I saw that Phil had taken a scalp earlier, and I believe that I had done something similar as well too, is that when you have the breakout scalp, you want to grab as much of it as you can, because the tendency usually with the breakout is it could break out, but it's likely it's going to come back up to retest. So if you have that breakout and you have the foresight to kind of go with it, you got to grab as much of it as you can, but then you can wait as it pulls back up to take the higher probability trade, or you can forget about the breakout and just wait for the break and retest. And if you can just discipline yourself And I mean, I've been day trading for, going on a bit now, but I just find that as time goes on, I'm trying to become more disciplined, and where I would have like overtraded or taken stuff that I would, and now I'm just saying to myself, no, these are my rules, and this is what I'm going to try to abide by. And if I miss it, I miss it, so be it. But if it comes back and it comes back to a level with a retester like what we spoke about earlier with the 8 and VWAP, yeah, those are sweet trades. And if you lose, you lose, but you're getting in with a tight stop loss, and the TP could run.
Yeah. We're at below
Now-
S3 right now, by the way. And
Yes.
we could look for a break and retest if we get near the S3 and then see a down candle.
3, 2, 1. Yes. Michael. So, Mike, Erwin, my question to you: what was that purple dotted line that you had? Was that some sort of moving average on your chart?
No, that's the bias
What?
line from the SRX indicator. I just put it as dots instead of a line.
I can't hear him. Can
It's
someone
the
let me know,
bias.
Lance or Aiden, can you tell me what he said?
It's the bias line. You know how you have the ADMA line and then the bias line? He just changed it to dots.
Well, what is it? Is it the 8 or the?
Man, we're hitting S4. No, it's the bias line. You see two lines on
It's
our
a bias
candle.
line. Okay, I understand.
I forgot what color's what. That's why I try to change the colors. So it might make sense to make it dash lines.
That's
Or
smart
dots so you can
to
see
make
it a
it
little bit better.
Yeah, that's very smart.
We just hit S4, guys.
Yeah, we got
Yeah,
a purple diamond popping up. But we still have 4 minutes on this for a 5-minute chart. When it gets below
Now,
S4, there's nothing really much below it. You get the max low, but
It's very extended at this
Oh,
point.
way too far. I have a
I think
critical liquidity level at 683.37 from a big wick that was left on the 23rd of December. So that will be my next target.
I think we're all using different ADX indicators. Lance, could you go over your ADX, the one that you use, and how to read it?
it's just a default.
It's what's called advanced ADX in
Yeah.
TradingView.
I just left the default numbers on. I don't really look at it much, just besides the trend. Because if you look at the red and the green line, you can see that we're pretty bearish because the red's above the green. But the bias signal also shows that. So I really don't look at it too much in the end.
Does anyone else? Because I use one that has 3 lines. It has an ADX and a red line and a green line. And right now, like it looks like the ADX is on the 1-minute charts up to 39, the red line's up to like 36, and the green line is 6.06.
In 1 minute, it's going to be pretty big. Yeah, around 42 or so it says.
I use something called NLADX. Basically, I just changed the colors. ADX 14.
So if we're going to take this diamond, we have to look for the max low or the level Erwin said. It's going to be interesting to see if it goes below the S4 or not. I might take one contract off it and see.
I think we still have there's an option in the indicator to don't show signals right after S4.
Yeah, I think it's one of the buttons.
Right.
I'm considering the 685 put here. I'd like to see a little bit of up move before I take it, though. It's all relative when your time frame, if you do like a 5-minute chart, like you could get in the middle of the candle. It's not like the market knows exactly what time frame you're on for when these candles pop up or not. Well, 685, I might take one. I don't think it's worth a runner. Still thinking.
I'm gonna take the opposite just for the hell of it.
Hey.
I took a call. I just took one.
There's a doji at 10:57 a.m. on the 1-minute chart. Well, it's doji-like.
I'm gonna wait until the candle closes and decide. Again, it's still relative. It doesn't matter.
Lance, I'm just looking at my graph here, and there was 1, 2, 3, 4 ADMA touches and retests for scalps this morning. And the first one came at 10:27. The next one was circa 10:35. The next one was 10:37. And, these were these three were all good entries. And some of them had 2 candle scalps as well. The last one actually just ran all the way down to 685, which was the previous market low. Yeah. So this is what I was saying earlier is, if you can just.
I took a 685, just one. 1.35, 1.39. I'll probably just OCO it, but if we touch S4, I'm probably out. I don't want to leave a stop at S3, it's too high. So I'm just looking at the actual premiums for it. I'm not doing active trader on this either. I just did one contract and I'm just looking at the premiums as it moves. And then I'll just mark it out. Yeah, it's going
Like the momentum indicator is shifting on the 2-minute to green. So
yeah.
there it goes.
Just hold it.
I'll get out at around
That candle, guys, the doji that I highlighted at 10:57. Anytime I ever see those candles, this is what they call a John Wick candle. And then when you get a doji like that and you get a displacement candle, which was at 10:50, I'm on the 1-minute chart. But if you look at the size of the 10:58 channel or candle relative to the doji, it's a large displacement. And then, of course, we got a pretty significant displacement candle. So I'm always cognizant of dojis. I mean, they don't necessarily mean things can reverse, but if you get there's a certain kind of candle pattern that you can look for with a doji usually in the middle. But if you get a large displacement candle in the opposite direction of a trend, it's usually foreboding that things could be changing. I mean, there's no certainties, there's only probabilities, but.
I agree. I think that they're more significant, especially when they are on critical levels.
I'm gonna have to log out of here for a second, guys.
Yeah,
no worries, Alan.
10 minutes too, but I'll leave the Zoom on because it still works.
Yes.
I lost $15 on that put, by the way. That's all right. So I lost 10% on it. But I didn't do the runner stuff, so if I did 3 contracts, it would have been $45. I can't survive. $15, I could still eat lunch.
Do you find, Erwin, with the day trading and kind of the scalping, have you kind of come to that point that I've come to where you're just going to try to go with the higher probability setups and just let the other ones, if you're not feeling it, just let them go. And if you feel that you've missed the trend, just set an alert back at the 8 or at a level again for a retest and evaluate it at that point. Are you kind of at that point where I am as well?
I'm trying really hard to do that.
Yeah.
It's
hard. It really is. It's just human nature kind of dictates that you do otherwise, But I think if you can do that, if you can find these entries where you're not psychologically, especially if you've had a couple of bad trades, that's the, if you can revert back to logic again and revert back to kind of the rules, that Phil kind of has outlined in the indicator, and also the rules with the 8 and things like that, such that you have those higher probability setups. And then just wait. I think earlier it was Monday. I mean, there wasn't a lot going on Monday, and I just set alerts on thing for swim. And I said, all right, if we get above R1, I'll do this. If we get above S1, we'll do this. And I'm just not trading in between. There's just too much job. And I waited. I think I waited until R1 came, and I took a trade at R1. Nice scalp, and I was like, all right, that's it. I'm done for the day at that point. But this is what this game is all about: is just waiting for those good setups and just setting alerts and trying to be disciplined. And to your point, Erwin, It's hard. It's hard to do this, but if you can actually remain faithful to doing it, and if you have a little bit of green every day, that's good, because if you remain more disciplined, you're going to have more green. But if you go back, if you revert back to your old habits, then yeah, that's not good. But yeah, so that's where I am right now. I'm trying to be a lot more rules based, and it's hard
You
for
got
sure.
got the sensei in here, Phil. So let the sensei talk if he needs to.
No, definitely. I mean, it's hard. I've been trying not to jump in like in the middle of nowhere, waiting for those confluences, trying not to guess like, okay, I know that the market is going to go from X to Y, and then it reverses, right? Because there's no confluence, there's nothing that is actually telling me to jump in. So I've been trying to avoid that. Like, I mean, after my third trade this morning and at the money, I've been sitting on my hands. Like, I don't see any reason right now to jump in.
Right. Yeah. I mean, I've had 3 scalps this morning. 2 out of the 3 were winners, and the price action right now is extended, so I'm not really looking at any type of entries right now, unless we get maybe unless we cross the 8 again and we retest the 8 upwards. I might take a scalp there, but the levels are so tight today. Even though the price action kind of contradicted that, because usually when things are sandwiched, we just have this like back and forth and back and forth. So this was a little bit of a statistical outlier to a certain extent, but I mean that can happen. Anything can happen. Anything can happen, such as price action.
Makes sense. With this purple diamond that popped up, I got out at a 10% loss. Typically, I'll go at a 20% loss on it, and it still might technically work. That was just an FYI on it, because we're starting to see a down candle in the next 5 minutes. I think keeping it to the S3 could have made sense, but if you hit the S3, that might have been over a 20% loss. So just be aware of the percent losses that you might get if you're going to do it with level-based managing instead of just like a percent-based manage. I know Phil does that quite a bit, where at least about a month ago, where he would keep it up to the next level, and stop out at the level before if it rejected it. But if you're doing really small position sizing compared to your account, I think it's fine to do level-based stop losses instead of percent-based. Just keep your sizing small compared to your account size. Like, you don't want one trade to lose, 10% of your account or anything like that. But if you're willing to take a level to the next stop, or take a stop to the next level, even if it's over a certain percent loss, like a 20% loss. But if your total account size only goes down like 0.5%, 1%, it's not really a big deal in the end. Phil, anything you want to add here?
No, I was just jumping in to see what you guys are
found
talking about.
I've just found myself, for the most part, scalping. I want to try to make more money on a trade, but I find psychologically I'm having trouble, holding on to my winners for a long period of time. And when I put my stop loss, I find that it always comes back and hits me. Even if I put even if I put it 2 cents above where I entered, somehow, so then I get a little bit leery about putting stop losses. I almost feel like they're out there like looking at various stop loss levels.
Yeah, I mean, that's pretty common for a lot of us too. I don't let runners go very long in the end either.
Yeah. The only thing I could say with regard to that, Alan, is always protect your profits. So let's say you get into something and I don't know, you're in at $1.10 and you've got a 20% TP, maybe on the first lot, and maybe a 30% TP on the second lot. As soon as as soon as you're close to that first TP, and you're watching the price action, your spidey senses are telling you, you know what, I'll grab it right now. And then just move up your stop loss to what you mentioned, break even +1. And and then you can kind of see what happens thereafter. And you know what, Alan? If you get stopped out, who cares? Who cares? Because you're getting stopped out with money in your pocket. You're not losing money. I mean, there's one thing if you say your stop loss below and you didn't bring it up. So like the way I kind of, to answer your question, Alan, the way I kind of view it is, I'll go and I'll scalp it and I'll try and grab as much as I can. And if there's a runner, I'll let it run and then I'll take it. But if it still runs and I like the price action, I'll wait for the pullback again. And then I'll repeat if the pullback is kind of at a high probability entry. So don't beat yourself up on that. It's always better to have some profit than no profit, because the worst thing that could happen is you take profit at one, you didn't move your stop loss, and then you get a really nasty wick. And it takes out the second contract that was, So
I would say 7 out of the times, taking that for example, if I take my profit, if I'm in at $1.10, I take my profit at $1.22. I'll put my stop at $1.12. So
I like that.
So I'm gonna make it $1. 3 out of 4 times, it'll come back and it'll stop me out. Maybe go down to 110, 108, and then it'll go back up. And I'm like pissed at myself because in theory, it's kind of contradictory because we say wait for the pullback. That's the pullback, but now I got my stop at that pullback, and now I got to take it out, and it gets taken out, and it runs again. Especially if you're trading in with the trend.
So one thing that you could do is take advantage of asymmetry, like mathematical asymmetry. So if you're going in with like maybe 3 contracts or 4 contracts, like let's say 3 contracts, you would take 2 off straight away and put that money in your pocket, and then you let the baby contract, the last contract. You move that up to break even +1. And so what, Alan, if it gets stopped out, because you already have 2 in your pocket, So don't beat yourself up for that. I would say that if you can structure it in such a way that you like the entry, you like the price action, and 1 or 2 candles, you've got a nice displacement, grab what you can with 70 to 80% of your entry. And then you can move up your stop loss and you have a runner. And if it, so be it. I mean, what is really, really sweet, and I think Lance might have had this one day, was where he kept moving up the stop loss, kept moving up the TP, kept moving up. Those are sweet when they happen. They don't always happen, And if they do, that's great, but it's likely that they won't. But who cares if the last contract is just the price of, the commission plus the exchange fees? Who cares? 2 out of the 3 were winners. The last one is a break even. And then you can just wait for another pullback again, an idealized high probability pullback entry. And then you cleanse and repeat and you do the same thing again. So don't beat yourself up about that because
I'm just trying to figure out a way around, because I mean it's kind of like you're playing both ways. It's like you wait for it to run, you take your profit, and then it pulls back. But now when it pulls back, that's where I got my stop loss, and that's what but if I didn't have the trade to start with initially, that's where I would enter on the pullback. You know what I mean?
Mm-hmm.
So I'm getting stopped up, but then sometimes I still want to be in it, so I go buy it right back again, and then it takes off.
Yeah, but I think
ever had that problem?
Yeah, no, for sure. But the way that I usually kind of mitigate this, I mean, it's hard to balance that kind of in the aggregate if you kind of think about it. But the way I was describing to you is that, like, if you have 3 or 4 contracts and something moves and you like the move, take the majority of it off, and then then you can move up the stop loss. And if you see the price action pulling back again, just move up your stop loss, beyond the break even +1 and get yourself out, and then wait for it to pull back again and re-enter again. Who cares that it's the price of 3 contracts, a commission again. Again, you want to get in at pullbacks at high probability entries and cleanse and repeat and just do the same thing again.
What I'm talking about is that, I trade 3 or 4 contracts. What I'm talking about is that one contract. I'm saying to myself, maybe I should give it a little bit more wiggle room. Maybe I should give it, a penny or two, to go against me, because I still, on 2 contracts, I made money. So if it goes against me 2 or 3 cents, what's the big deal? And if I like the trend, have you guys ever thought about that or no?
I think that's not a bad idea, but you always have to use your intuition. you know, you're watching the price action, you're watching the option chart, and if you feel that the price action is exhausted, you know, you're looking at the ADX, you're looking at the levels, you're looking at everything in the aggregate. Like sometimes we have to make quick decisions. I mean, it's almost like you're driving down a street and a deer comes across the road, and you didn't see the deer coming across the road, and you have to react instantaneously. Like the laws of physics are saying you have to react right now. So yeah, so if you don't like the price action, just grab with the TP on the active trader ladder, just pull it down and take it out. One thing that you do not want to do is you don't want to pull down the TP right to the same level that the stop loss is, or go below, because you could potentially go short. So just be careful that there's always bandwidth between the take profit above and the stop loss below. But
I move those things on the charts, basically. I
do the same thing as well too. Yeah.
Okay.
So I don't think, Alan, to kind of answer your question, that to me is not a big problem. I mean, if you're coming in and you're grabbing what you need to grab, and you have a runner, and the runner just gets beaten up, but it gets taken out at you know, break even, that's okay. That's okay. And then if you wait for the pullback again, just cleanse and repeat. You know, just repeat the process over again. Because mathematically, if you keep doing that and you're doing it based on high probability entries, the calculus and the stats is in your favor. Yeah.
All right, guys, I got to get going. But I'll leave the Zoom open if you want to still talk, because now I realize that you could keep doing that. I'm going to the Spurs game today. I got the shirt on.
I went to the Florida Panther game against the Washington Capitals on Monday night.
Awesome.
That was fun. It was a good exciting game. You guys like hockey or not really?
I like hockey. I don't keep up with it though.
No.